Welcome back to the deep dive. Today we have a source stack that feels less like a quiet Friday night of reading market charts and more like a high-stakes geopolitical thriller playing out in real time.
It really is. It's a convergence of charts and, well, global shockwaves.
We're unpacking a mix of extremely bullish technical analysis for crypto, specifically XRP and Bitcoin, set against this just unprecedented global catastrophe.
And our mission today is to distill these sources, which mostly come from some high-profile crypto analysts, to figure out why they are declaring with such certainty that the next 24 hours are crucial.
That urgency is palpable. The sources give us a snapshot of a market that's highly optimistic, almost giddy. But there's this distinct edge of nerves.
It's a critical juncture. The underlying mood is that the technical setup is almost too perfect for a massive move.
Right, too perfect.
But because the move is so large, there's still this, fierce internal debate in the source material. Is this the real deal?
Or is it a trap?
Exactly.
Yeah.
A brilliantly engineered, gigantic trap designed to liquidate all that early optimism. That's the tension we have to navigate for you.
Okay, let's unpack this by starting where the analysts always do. The charts. For XRP, the source material notes we're sitting around, what, $2.30?
Yeah, around there. And for the last few weeks, the price has been fluctuating really tightly between, say, $1.99 and $2.26.
Honestly, that sounds less like a parabolic surge and more like a nap. So why are analysts calling this chart damn bullish?
Because they aren't just looking at the last few days. They're zooming out. They're looking at the weekly chart.
Okay.
And this is, a classic pattern recognition exercise. The theory suggests we're following a template. First, you see a significant initial move up.
The first hint of life.
Right. And that's followed by a necessary pullback.
Just scare out the weekend.
Exactly. And then a long, grinding, sideways consolidation period.
Which is the phase we're in now.
Precisely. And now, the chart suggests that consolidation is ending, and we're anticipating the next leg up. They see history rhyming with previous major runs.
And Bitcoin, as always, is playing the essential role of the market conductor here. BTC is back above $91,000.
Right, and that 91K level is described by these analysts as the make-it-or-break-it moment for the entire market cycle.
So if Bitcoin can keep moving up, that signals the start of alt season.
It signals the definitive start. For those listening who might be newer, alt season is that period, usually after a big Bitcoin surge where capital rotates out of Bitcoin.
And floods into the smaller cryptocurrencies, the altcoins.
And that's what typically results in these massive percentage gains for assets like XRP. The source does make a strong caveat, though. This surge has to happen without price manipulation.
Yeah, there's the constant anxiety.
Always. That fear ties directly into the timing of the sources, which came out just before the U.S. market opens Monday morning. They're highly suspicious of what happens when the traditional finance players re-enter the market.
Here's where we create tension, though, because the source material immediately presents the opposite view, the doom and gloom perspective.
It's a massive contradiction. Even within this generally bullish report, there's this powerful, lingering fear that this entire setup is a massive bull trap.
A fake breakout to lure buyers in.
Right, before an immediate reversing crash.
Mm-hmm.
The bearish analysts are predicting Bitcoin crashing all the way down under $50,000, and XRP consequently falling back under $1.
I have to push back a bit on that. If they're seeing historical patterns that suggest a breakout, why give equal weight to a complete collapse? Does that show a lack of conviction?
I think it speaks to the volatility of the space, and the high leverage involved. They're reporting on the market's collective paranoia. The technicals might scream bullish, but the fear of manipulation or a sudden regulatory bomb is always there.
Fair enough. So if we're in this high tension zone, what's the immediate non-negotiable threshold? Is there a specific number they're watching?
Absolutely. The key technical threshold is simple for XRP. It needs to break and, crucially, hold above $2.20.
Hold? Not just touch it.
Exactly. It needs to establish that as a new base of support. Analysts believe if it fails to do that, if it rejects that level, it could lead to a rapid crash back down toward 175 or even lower.
So 220 is the line in the sand.
It's the immediate line in the sand that separates damn bullish from bull trap.
Yeah, we pivot completely. We're moving from the tight lines on a chart to a massive real-world event that the source material suggests is about to act as this catastrophic yet positive catalyst.
Yeah, we're talking geopolitics and oil. This is where the script moves from technical analysis to military action.
And this is the part of sources where, we have to be careful because the claim is it's just extraordinary. The economic weight here is just staggering.
It is. According to the source, Venezuela holds the world's largest proven reserves, 303 billion barrels of crude oil.
303 billion.
Let's ground that number using the source's math. With oil at about $57 a barrel, those reserves are valued at $17.3 trillion.
Trillion.
It's an almost incomprehensible number. The analysts even tried to downplay it, suggesting that even if the U.S. sells it for half price, we're still looking at an $8.7 trillion gain in national control.
8.7 trillion. I mean, we throw that word around too easily. Put that into a context you can really grasp.
Okay, think of it this way. 8.7 trillion is more value than the annual economic output of Germany, the UK, France, and Italy combined. It's an economic tidal wave.
That's a staggering transfer of wealth and control. But here's the giant logical leap we have to address for you listening. How does seizing Venezuelan oil connect to the price of crypto? Why wouldn't that capital flow into something more traditional?
This is where Chad Steingraber's theory, which the source relies on heavily, becomes critical. He addresses that exact question.
Why didn't the market react immediately?
His answer is that oil trading operates on futures contracts. It's future-facing. So the news hadn't been priced in yet.
Okay, so when does the pricing start?
The oil markets react for the very first time when the Sunday futures open. Today, at 6 p.m. Eastern. Steingraber predicts prices will tank. Not to zero, but a sharp downturn because of this massive, sudden new supply.
Okay, now connect that drop to crypto. This is the risk-on, risk-off dynamic.
Right, we need to distinguish between them. Oil traditionally is a risk-off asset. In times of instability, people buy it as a safe haven. It has tangible value.
And crypto is the polar opposite.
Precisely. Crypto is the definition of risk-on. It's volatile, speculative, high growth. Steingraber's theory is that when a major risk-off asset like oil suddenly collapses in value, that capital has to flow somewhere else.
And it flows into risk-on assets like crypto.
Exactly. Primarily because of crypto's high liquidity and speed of transfer. This makes the period right after the futures open, the next few days, absolutely critical for seeing this theory play out.
So if we step back from the immediate shock for a moment, the source material also gives us a longer-term historical perspective. It suggests that even without the oil shock, XRP was technically poised for a massive move.
Right, they're suggesting history is rhyming again. They're drawing a direct parallel to the 2017-2018 run. That rally was preceded by a multi-month sideways range, a huge capitulation event.
Where everyone gives up and sells.
Yep. And then the formation of a technical pattern called a falling wedge. It's where the trading range gets tighter and tighter, signaling immense pressure building up. The analysts are convinced the current chart is mirroring that exact sequence.
That's interesting. And it's not just the technicals. The black swan capitalist prediction introduces an outside analogy: silver.
And what's fascinating here is how the source uses silver to highlight the psychology of the breakout. Before its own sudden parabolic move, silver was, ignored, written off, boring. The source calls silver's move a textbook example of how these asymmetric moves unfold. They catch late participants completely unprepared because they waited for a validation that never came in a slow, obvious way.
So the prediction is that there's a high probability XRP follows a similar trajectory, maybe around 2026, breaking out of nowhere. It will be a gradual climb. It'll be a sudden, violent repricing.
Exactly. And that conviction is what feeds the price predictions, which are, well, they're wildly optimistic.
Let's detail that range. What are the three buckets of bullish forecasts the sources are presenting?
We have three levels of bullishness. On the conservative side, we're talking $10 to $15. A bit more bullish, maybe integrating ETF inflows, is the $27 to $50 range.
And then we move to the truly massive numbers.
Yes. The super bullish predictions put XRP well above 3 digits. It even includes a note that analyst Paul Barron is covering the possibility of $10,000 XRP.
And for those prices to be plausible, it implies extreme scarcity. But the source immediately dismisses one common metric for that: the ledger burn rate.
That's right. The source specifically calculated that even if the ledger processed a ridiculously high 1,500 transactions per second, it would still take over 2 years to burn just 1 million XRP. The analysis concludes the burn rate is insignificant. It's not the primary driver of scarcity.
So what are the real catalysts that analysts believe will create that scarcity?
They list 4 crucial interlocking drivers. First, ETF inflows sucking up supply. Second, massive institutional FOMO, fear of missing out. Third, retail investors seeing the movement, locking up their XRP for long-term passive income, taking it out of circulation.
So that's demand and holding. What about the actual utility?
That's the fourth and most powerful factor tied to those extreme price targets. We're talking about utilization by companies creating XRP treasuries, and perhaps most critically, used by central banks and the BIS, the Bank for International Settlements, for cross-border liquidity and CBDCs.
Let's focus on that extreme scenario for a minute. For that $10,000 price to be plausible, we're assuming full integration with the BIS. How does that create scarcity?
It creates scarcity by function. If XRP is adopted as the standard bridge asset for global payments, major banks and central banks have to hold vast treasuries of it to ensure instant liquidity.
So they're locking up huge amounts of the supply.
Right, and the price is no longer dictated by retail, but by institutional demand for utility. The higher the price, the easier it is to move large sums of money, which paradoxically drives the price even higher as adoption increases. It's a closed feedback loop.
So $50 is a great speculative run, and $10,000 is a complete global utility paradigm shift. At what point does the source suggest the market truly breaks?
They pinpoint the $4 to $6 range as the critical psychological tipping point. That's the moment of maximum acceleration. That's when massive FOMO is expected to kick in from all three sectors: retail, institutional, and possible ETF FOMO.
And when that happens?
The source warns the breakout will be so quick, anyone sitting on the sidelines will be penalized. They'll be forced to buy in at a huge premium once the move is fully validated.
That enthusiasm, though, needs to be tempered by some skepticism. We started with this immense urgency. The next 24 hours. The chart, regardless of the geopolitical catalyst, looks damn bullish, according to the analysis.
The market is expected to continue upward, at least until Monday morning, when potential price manipulation might cause a pullback on Bitcoin.
So the overarching sentiment from both the technicals and that dramatic oil theory is that a major price breakout is imminent.
And will happen quickly. The sources warn that the market is set to penalize those who are sitting on the sidelines, waiting for absolute confirmation,
forcing them to chase the price once it validates the move past that key 220 level.
It's a high-pressure scenario, and it's driven by these external events that seem almost too convenient to be true.
And this raises, I think, the most important question of this entire deep dive, something for you to mull over.
Yeah. If the geopolitical events cited, the U.S. gaining control of $17.3 trillion in Venezuelan oil reserves, if that truly acts as the fundamental catalyst,
forcing capital flight from oil into crypto,
then where did that leave the importance of the technical analysis? Does that shift the entire conversation away from looking at falling wedges and support lines? And if massive, fundamental macro shocks like this are the only events capable of triggering such exponential moves, are they the only thing that truly matters for the rest of this cycle?